Welcome back. It's now time for business. Banks that do not reduce lending rates to reflect the lower central bank rate face fines of up to 300 million shillings. Central Bank of Kenya Governor Dr. Kamau Thugge says the regulator has commenced a physical inspection of 5 commercial banks to identify those failing to reduce the cost of credit. The inspection follows concerns by Central Bank over the slow pace at which commercial banks have been lowering interest rates on loans.
The Central Bank of Kenya has progressively reduced the base lending rate by 225 basis points from a high of 13% in June last year to the current 10.7%. However, the regulator is concerned that commercial banks have been slow in passing down this benefit to borrowers. This has prompted the regulator to conduct physical inspections to ensure banks are implementing the risk-based pricing model to lower borrowing costs, support business expansion, and stimulate economic growth.
We have started with the on-site inspections. I think we have staff now working on the. We started with the 5 banks, and that should be completed within the next 2 weeks or so. So nobody has been fined yet. Obviously, we have to wait and see the results.
Dr. Thugge says non-compliant banks will face penalties.
Penalties have also been increased from 2 million to 20 million, and there's a provision now to charge the banks by the penalty to be 3 times how much the individual banks have benefited by. So if they benefit by 100 million shillings, they will be fined 3 times that, which is 300 million shillings.
The action by the Central Bank of Kenya is aimed at supporting private sector activity to drive economic growth, even as he projects the economy to expand 5.4% this year. Dr. Thugge says the Central Bank is in talks with 13 banks whose core capital is below 3 billion shillings to progressively increase to a minimum of 10 billion shillings. Wairi Mujenga for Prime Edition.